Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, so there's this article that came out on the Gleaner today, and that's June 5th, 2025, about an incident at the Phoenix Academy here in Jamaica. And as I read through the article, listened to maybe, some of the things that were said, I really thought I needed to do a video on this because a lot of the things that are mentioned in the article, I'm just I saw a lot of kind of storylines coming from it. Some things that I think as a community we can share and discuss to see how this kind of situation should be, interpreted. So if you have not heard about it, let me just give it a rundown before we go through the Gleaner article. So Phoenix Academy, which is a school, sought to raise capital seemingly from the parents of the students of the school. It was called an internal IPO. Parents would have given the school funds to invest, and then the school would have promised a return on that investment. And then, of course, after some time, the school seemingly was not able to repay the parents the funds the interest that was promised, and so it then now became a thing, right? So it's always interesting to me, firstly, that you never hear about these things until something goes wrong, right? That's the first thing I'll say. That's really the first lesson, right? Because the title of this video is Lessons Learned. And really, it's not just going to be from this situation, right? Because, and I'll just be transparent here very quickly. When I read this article, it sounded familiar to me, right? My first company is, when I had my first company, it was back in the cash plus era, right? And I remember it was so hard to raise money, right? I couldn't get a loan from the bank. And so one of the things I did was, certainly not to the scale that we're talking about here, but I remembered how hard it was to get money, so much so that I thought, maybe if I had some friends who invested or gave me money and I promised them a return, then I'd be able to get the money that I needed to get my business forward. And then I'll just, repay them a little bit over time. Now, the lessons I learned from that is also going to be included in what I'm going to say here now, because it's similar in the sense that I was in a position on a much smaller scale, of course, to where Phoenix Academy is right now, in that I was an entrepreneur, I had a business, I needed capital, I came up with something, shared it with persons, and of course, I repaid everyone their funds and everything like that. But just the lessons that I got from that, I think, would be helpful here, just for persons to understand how this whole thing will work, right? And there are some things about the article based on what was said that I can see how it will either have people, outraged or concerned, or just kind of disgruntled with how everything has been said, right? So I wanted to kind of give a balanced perspective, not commenting or sharing my personal opinion on anything, but just kind of saying some lessons that I saw there, right? So let's go through the article and then we could talk. As usual, shout out to everybody who is here. Garfield, good night. Garfield, you said you're waiting for good news. Which good news you're waiting for? You're waiting on some dividends or something? Finishing finance, good to see you again. So let's start with the article, and then I'll talk about just some of the things that I've learned, or I think we can learn from this, right? So it says several parents whose children are either still or formerly attended the Phoenix Academy have retained attorneys and filed a complaint with a major organized crime and anti-corruption agency over an investment program being run at the embattled institution. Now, this is interesting that the parents have retained attorneys and filed a complaint with MOCA, because in the fact that they filed something with MOCA is interesting to me, in that, because when it further down it says essentially there was an agreement in place, and the parents were expecting their funds to be repaid, etc. I mean, I'm not sure if this is a protocol or not. I'm not one to speak to that, but that certainly stood out to me. That, you know, that's what happened. So it says on Monday, the Gleaner revealed that administrative staff, parents, and so were locked out of the school after the landlord changed the locks at the gate and placed a notice there. Now, I drove by Phoenix, I think on Tuesday, and I saw it and I was like, okay, cool. So this is, so here's the thing that I'll say, and let me just probably get to the first lesson here, right? Running a business in Jamaica is really hard. Running a business in general is really hard. Finding capital, finding an affordable way to do business is hard. One of the things I actually discuss with Renee all the time is, so for example, something as simple as paying your taxes, right? When we discuss it all the time. So for example, one of the things we try to do is pay our taxes, and we're like, it takes, like, we have some like, we always feel like we're behind because it's so expensive to run a business, and we're like, sometimes we'll do business with someone and we notice, for example, they would charge a certain rate, or they'll do their business a certain way, we're like, you know, we kind of understand why certain businesses are structured in the way that they are, because, you know, either they're trying to keep expenses low, or they're just trying to literally get by. Because when you look at everything to run a business, and with a school now, you have location costs, you have staff costs, you have maybe food costs for the kids. I don't know if you have to pay any fees to the Ministry of Education. I don't know how that side of it works. But it's not necessarily surprising, or so if the school had to raise money in order to keep going, clearly they needed capital from somewhere to either expand or to cover expenses or things like that, right? So the fact that it got here is not necessarily surprising, because that's why they would have maybe needed to raise money in the first place, right? Hopefully that makes sense. So according to its social media pages, the Academy is a privately operating institution which focuses on differentiated and individualized instruction for students 2 to 12 years. The school is not associated with Phoenix All-Stars. I found that interesting that I had to state that. The parent of a former student who still has ties with the school by virtue of the investment program claimed that the institution has failed to pay back several $1 million demanded by its investors. Now let's get to the second lesson here, right? And I'm not keeping track of the lessons, by the way, so I may repeat some, who knows. But here's the thing. Again, I said this at the start. Usually these things don't come in the public domain until something is wrong, right? So claimed the institution has failed to pay back several $1 million demanded by its investors. Now, and we'll get to the whole, you know, calling it an internal IPO, which I certainly don't think that term should have been used, but we'll get there. It usually with a business, if you owe one person, then you owe somebody else, right? What I mean by that is the fact that we saw that the landlord was owed rent. It's not surprising that, for example, the parents are owed money. maybe it will come to light in the next few weeks that there's other debt outstanding, simply because, and we'll get to it, but one of the things that was said is that the interest rate or the incentive that was offered is whatever was invested, paying 20% per quarter. Now, I don't know what business what their margins were like, but any business repaying 80% interest on a loan is gonna really struggle unless their margins are ridiculously high. So in education, I don't necessarily see that as a high margin business, except if it's maybe privatized or some specialized classes, etc. But this is for children, so it's not likely to be anything that's going to have any ridiculous margins. But the problem that entrepreneurs or small businesses find themselves in, they likely thought that the best way to raise capital was to make persons an offer that they could not refuse. Now, it sounds great and awesome to get 20% per quarter. The first thing, so two sides, right? The institution probably felt like they had to offer this rate to make people willingly give up their money. And from the parent side, every single parent who would have invested in this probably thought, okay, I'm able to get 20%, because the parents themselves are probably like, well, I have these savings, but it's not growing. I have growing bills, etc. That interest income can help me take care of some things, etc. So you put $1 million in, you're getting 200,000 per quarter back, and your principal is still there. That feels like a good deal, right? So, but the problem is, if the school is not generating positive cash from the investment, then they're going to run into issues. Now, the problem that some persons find themselves in when they take a loan in general, now, not speaking about this, and this is something that I see all the time. I've even seen this with some listed companies, right? You raise money or you borrow money, and let's say that you borrow $1 million, right? And you promise to pay the person back 80% per year. And your business, that million, firstly has to go into something that is generating maybe 160% on whatever you're taking in. And let me tell you why. If you're gonna repay 20, if you're not repaying that 20% per quarter from profits, you're actually going to put yourself in a worse position, because you're paying out 80% plus you have your normal operational expenses. So if they were operating at a deficit, right? Let's say that they needed to raise money because they didn't have enough cash. And I don't know what was shared. For example, I don't know if financial statements were shared. I don't know if they just were offered an investment opportunity with maybe some plans for the future. But I would have hoped that the parents would have seen like financial statements maybe for the last 2-3 years to see how cash flow was for them. Because, and back to the point I was saying, if you borrow that $1 million but your business is not generating enough cash, for the first 3 months, 4 months, it's easy to repay that 200,000 because you had the $1 million. But by month 4, when you've repaid 600, well, it's 20% per quarter, so 200,000 you're paying back per quarter. By quarter 3 now, you would have repaid 400,000. So let's say that $1 million didn't go into anything that was productive. You're now down to 600,000. You're supposed to pay another 400,000 in 6 months, and that cash would not be able to generate anything positive for you. Hopefully you follow what I'm saying. So when businesses borrow money, if that money is not used for something productive, and that's why we always say, for example, that's why some investors will have an issue when companies borrow, for example, to repay debt instead of, for example, using it to spur some growth, right? Exactly, finessing finance. It's not sustainable depending on the margins, right? So that's why I'm saying we don't know what the margins are, but based on the type of business, I'm imagining that the margins weren't high to begin with, right? because children education is not known to be big business, right? So anyway, let's move on. So I'm just saying that at this point here, the fact that the parents are owed, landlord was owed, maybe other persons are owed as well, is not surprising here because of the rate that was promised, right? So we're talking about millions of dollars, millions, not one, not two, not three or four. Now, if you know basketball reference, when LeBron went to Miami, said they're gonna win championships, not one, not two. I just thought of that. That was funny to me. So over 40 million collectively with parents. So I wish I knew more about this meeting. I wish we could have analyzed this from the perspective of seeing the financials of the business, seeing how the money was used. We may never hear those details, right? But if the amount here, and this is how I'm reading this, Renee, tell me if I'm right here. It says we're talking about millions of dollars, over 40 million collectively with parents, said the parent who asked not to be named. Is it that this is saying that they borrowed 40 million or that they currently owe over 40 million, right? Because if the 40 million was borrowed, if 40 million was borrowed and you're promising 80% per year, that's ridiculous, right? If it's 40 million owed, because look, it's very easy now. If you borrow, if they raised 20 million, for example, in the first year, they would be required to pay back. Why am I acting like I don't know math? 20 million, that's 16 million. 80% would be 16 million. So they would have to find 16 million to repay in the first year, right? Which again, that just tells you that would not be sustainable, right? We'll get there, finessing finance, right? So the gleaner understands that parents received an email correspondence introducing them to the investment program that began operation soon after in February 2024, and we're in 2025. As I said, we probably would not have heard about this unless something, went wrong, right? So documents seen by the gleaner indicate that the parents were invited to invest in the school's 10th anniversary internal IPO. Now, I have a big problem with the naming of this. I don't know whose idea it was to name it this way, but when I saw this, I was very, very disappointed to see the name, only because in our culture, persons really don't understand investing, right? Cash plus that was just mentioned here, people thought that was investing, right? People look at that and say that investment didn't work out. That was not investing, right? And there are other schemes that have been brought to the market in past years that have been labeled investing. So the use of the word IPO here, which means initial public offer. Now, I don't know if somebody's going to say, well, it was offered to the public, meaning the parents, so it can be used in that case. I don't agree, right? So an IPO, how the term is to be used is speaking to companies that go public in terms of listing their shares on a market, on a stock market to be traded. So to call it that, they could have just simply called it some fundraising activity or something like that, right? But to call it an IPO, because imagine those parents now who, let's say they see a Learn, Grow, Invest video about an IPO, they're gonna say, well, the last IPO I tried to go into, it never worked out, I'm not going to invest, right? So that's why I'm not a fan of the use of the word IPO here, because I think things like this now, when it gets out, persons are like, well, the school is right. Imagine if we try to do our own IPO now and we're relatively unknown, persons are going to be like, well, the last IPO I went into didn't work out, why will this one? So the use of that word was very, I didn't like that, right? So it says, according to a letter, Phoenix Academy wanted to raise $6 million through a partnership with a named accounting firm. So with this amount here being 6, I'm wondering how we got to the 40 million, right? Because if it started February 2024, 80% on 6 million, even if you count interest, unless it is that they kept on raising, right? Because the principle of this is, you start with X, you raise money because they kept on paying out. Maybe they needed to keep raising more, and then that's where it became Ponzi scheme-ish, in the sense that now a Ponzi scheme is, let me explain it for those who are not aware. So a Ponzi scheme is when you simply take money from one person simply to pay the other. There's no underlying product or tangible service that is offered. It's simply just a method of moving money around until everything pretty much collapses. And a Ponzi scheme will always collapse. So it could be that the original intent to raise capital was legitimate. They simply underestimated how much they could have repaid when they saw that they started to have to pay out more cash than they had planned for or really considered. Then they said, well, let's take more money and then just kind of kicking the can down the road. I don't know, right? This is me making assumptions here. But if it got to 40 million, it could be that they took on more money, because if they wanted to raise 6 here and you count the 80% for 2024 and 80% for this year, the fact that it got to 40 million means they kept on raising money. Exactly, Renee. So the payouts would have likely encouraged reinvestment. So that is a slippery slope. And I do have a warning for entrepreneurs, right? So again, let me go back to the story that I started earlier. When I had my first company and I wanted to raise money simply just to get by, right? I don't think I raised much. It was like 100,000, and I promised person I had to commit to the 10% per month as well, because I was having to compete with the cash pluses, right? So I wasn't able to get money unless I would have committed to something ridiculous like that. And I can tell you, we paid back every cent that we borrowed, but it crippled our business, right? For one person, I remember borrowing an amount from them. I won't say the amount here, but we agreed to pay something over 12 months. When the 12 months came and I had to repay back the principal, we pretty much had to take a loan. And not me taking the loan, Renee had to take a loan, because I didn't have a job. I had the business. And so that loan took, I don't remember, Renee, 3 years to repay. So that one decision that we made to borrow that money that wasn't used for anything productive in the business put us in a hole for a long time. And that's probably part of the reason why the first business had to close down, right? 5-year loan. Guys, let me just say publicly, I appreciate my wife, right? Because when we made that decision to borrow the money, what I even said, not we made the decision. I made the decision to borrow the money, committed to some ridiculous terms, and then had to repay principal. I think when we got to that point of having to repay the principal, I was like, no, this is not sustainable. I'm not doing this again. We had to take the loan. Renee had to take the loan. So that loan was being repaid from her salary. There was no other source of capital for the business. So we literally started to struggle after that, because we spent the last 12 months repaying the money that we borrowed. So every single available cash that would have paid rent, cash that would have paid staff, cash that would have paid for products, pretty much had to go out. Now, if I simply decided to raise more money, and we see this with companies, right, where they're in a hole and the solution is to borrow more rather than innovate or to change their business model, etc., you are going to end up in a situation where you owe even more, because you can only delay the inevitable for so long, right? So one day I'll tell that story in full here, right? So they started out with 6 and got further. Now it gets more interesting, right? So it says a table in the letter outlining the proposed investments and returns indicated that 350,000 would earn 70,000 over 3 months. Similarly, 500,000 would earn 100,000 in 3 months. The returns, if annualized, will result in an 80% interest rate. Now, here's the thing, guys, and I say this all the time to persons. Now, we teach this in our investment challenge program. Now, the stock market can give you these kind of returns, right? But you should never go into any investment, especially a private one, and expect to get these type of returns. It's not just impractical. No, I'm not saying it's impossible, right? Because it really comes down to the margin of the business. Because here's the thing. I've had businesses that are no persons with business models where you do one transaction and you get like 100% return. Now, if you're getting 100% return on something, and you're paying back 20%, that math makes sense. But when you take capital and you put it into a regular business operations, not necessarily a product or service, that's when the money kind of get lost, and the thing that you borrowed it for, you're just kind of trying to hold everything together, right? So what you should look at, if you see an investment proposing to offer you this much, you need to know how that company or that firm is going to be making money, what margins they have, because you have to see or assume that they would need to make back 4 times what they're proposing to pay you for what the return being offered is to be considered realistic, right? So financing, that's how it is. We sometimes have to make mistakes so we can learn the lesson. Certainly, right? And for me, that those mistakes that I've made taught me a lot. It taught Rennie and I a lot. I was saying to one of my coaching clients today that Rennie and I don't do loans anymore. Like we've taken so many loans, made so many mistakes, that the type of loans we take now are like mortgages for investment properties, things like that. But we've needed to borrow or needed capital for L.E.A.R.N Grow Invest multiple times since we've started. We've checked out loan rates. When we do the math, it would not have been sustainable to repay that loan and still grow the business. So we didn't see a way for that to make sense. So we used our own money to put in the business to maintain things until we're able to get the business to a certain point and things like that. So I get it. But the temptation to borrow, and I use the word temptation here because borrowing in some cases is simply, as I said, just moving or kicking the can down the road, because it could be that the model is not sustainable. It could be that you need to make some hard decisions that you're unwilling to make. And and it's just that it would be better, for example, let's say that they wanted to raise 6 million to do something. And again, I don't know the whole story here. I wasn't privy to those details. But if it is, for example, let's say they wanted to borrow the money to, create a new product or, launch an online learning platform or something like that, that would be able to generate revenues. That's different than just saying, hey, we're raising this money, and it's not necessarily clear how positive cash is gonna be generated. I saw it too. I'm not even gonna pay attention to Omar right now, right? So I invested 1 million in February and I got interest payments in April. I rolled over that million and invested another 1 million to get more interest payments. To date, the school has paid some and more is outstanding, the parents said. And this is what we see. So as I said, this may not have started out like a scheme, but this is actually now from the other side, the type of behavior you see, right? So I haven't said a lesson learned in a while, but this is what lesson number 3. When persons, I don't know if you've seen this meme, when they'll show this guy say this, the meme says what investing in the crypto market is like. You put money on the door, somebody sends back out some money. So you put more and you put more till eventually you don't get any money back. That's what happens here, right? So you put $1 million, you got your first payment. What your brain says is, okay, this thing works. That's what the brain says, right? This thing works. I put in $1 million, they gave me the interest payment. So how can I multiply that? How can I make more? So I don't know where the other $1 million came from. I don't know if it was savings. I don't know if it was borrowed. We don't know. But the wise thing to have done here, and I don't know the parent, I don't know their situation, etc. When you make an investment, it's better before you add more money. The prudent thing to have done here, well, I mean, the prudent thing would have been to analyze the financials of the company, etc. But in this case, if you invest $1 million and you get back 200,000, don't put in another $1 million. It would have been better you wait 5 quarters, get back your $1 million, and then if it is that you're getting no surplus and you want to reinvest that surplus, that's different. But you don't invest more of your own capital, because if you think about it, if that parent gave them $1 million, got back 200,000, and gave them another $1 million, he's now out 1.8 million when he's only gotten back 200,000. You understand what I'm saying there? So that kind of strategy doesn't make sense. But what you think about here is just the returns, because you saw that you got an interest payment. It feels like an interest payment, but really all you've gotten back is your principal, right? Hopefully you understand what I'm saying here. So that's certainly a lesson. So the wise thing to do here, and this is for any investment now, right? Because we're talking in general. If you're investing for dividends, or you're investing in some real estate or something, think about your capital preservation, right? So if you're preserving capital, you want to protect the capital, all right? So don't put in more until you've lowered your risk. You lower your risk by getting out your principal first before you go and add more money, right? And again, this is the type of kind of behavior though, or story that you'll see in this case, because again, the brain says, well, I got my interest payment. And you've heard of things like, loom wheels, etc., where, you just need to find X amount of persons, they come in, you get your money, so you think everything is fine, but somebody else is going to get the short end of the stick, right? Some attorneys have reportedly been trying, let me see, some attorneys have been reportedly trying to reach the school's principal with no avail. The cleaner understands that he's not been seen for several months, right? So that's a definite red flag right there. The school has remained in operation through the leadership of another member of its administrative staff. The parents said that all communication during the better part of the period was done via email, WhatsApp, or telephone calls. This is a very big red flag here, right? Because if the principal was there when the capital was being raised, and then now the principal is not seen after, that's a sign of trouble, right? Because if I came out to you to raise capital, and then subsequently, especially when payments start being missed, you're not seeing me, you're not hearing from me, everything is via email or WhatsApp. I mean, the truth is, they don't even know if they're coming from the principal, if they're coming from anybody who's representing the school, right? So that's a major red flag there. You certainly don't want to do that. You want to have open contact and visibility of the person who is the face of the institution you're raising money from. And this is why it's important, for example, in our market, to be seeing the representatives of the companies that you've made investments in, right? So yeah, let's move on from here. So before all of this, it was doing pretty well. I don't know where it went wrong, the irate parent said. I wish I could meet all the parents in a room and kind of teach them some basics about investing. So the perception of it doing pretty well if they would have gotten interest payments but not recovered their principal, it was not doing well. It appeared to have been doing well, but it would not have been, right? So I don't know where it went wrong. That not knowing where it went wrong, that just simply comes from the model. The model was not sustainable. Repaying 80% per year in that way is not sustainable, unless, again, the margins would have been some 100, 200, 300%. They're able to cover expenses, because whenever I just thought of another situation here. So for example, when a company who is listed, maybe they do a bond. Let's say a company raises a bond. I'm not calling any names here. You see a company issue a bond, billions of dollars, they're repaying the interest payments. It comes time for the bond to mature. You're supposed to get back your principal. Then the company raises another bond. What that is telling you is that the company is not able to pay back the principal. They're just raising another bond to then now just kick the can down the road because they can't repay the principal. They simply don't have the cash, right? I won't get into why that is an issue, but if you're getting your payments, it doesn't mean that the thing was going well, right? It doesn't mean that it was a solid investment. It just means that maybe new persons came in, maybe they borrowed money, otherwise you don't know, right? So just, yeah. So the parent told the Gleaner that there's a WhatsApp group of parent investors who share updates about their monies. Again, I'd love to be a fly on the wall in terms of this WhatsApp group, just to understand, right? Because my interest here is to understand the situation. I'm not speaking down about the institution, not saying anything about the parents, not anything like that. Because for me, I think this is important to understand. I know firsthand what would have led the school to try and raise money in that way. And I know firsthand what it is like to invest in something, because I think I was sharing it the other day. Renee and I gave money to somebody to invest in Forex for us, and we have not gotten back our money. Mind you, it was a small amount of money, but we gave them the money. Renee, we actually got one interest payment. We got one interest payment, and we never got back our principal, right? So that actually happened to us many years ago, maybe 5 or 6 years ago, right? So I've been on both sides. Renee and I have been on both sides of this. And somebody would say, Jermaine, why would you do that? That doesn't make sense. It does not. You don't usually step back and assess the situation, both from the school, right? The school probably thought about, we need this money because they were probably facing debt or some other challenge. They thought, let's raise this money from the parents, get in the money, give them an attractive return, and we can figure it out. A lot of entrepreneurs have the mindset, a lot of businesses have the mindset to figure it out. And that's just dangerous. That's just dangerous. And then at the same time, I don't think as a country, we understand how to evaluate investment decisions, right? So there are the two things here that I see. But I'd love to be in that group just to see what is being discussed, because I'm sure there's tension, there's uncertainty, and things like that. So the group alone that I'm in, which kind of sounds like there may be multiple groups, accumulate about 12 million. The school owes me 2. That's the principal plus another 700,000 worth of interest. But I'm just concerned about my principal. I want back my principal that was invested. I reported it to MOCA in May, and I also told 2 more parents to go and report it, right? So you notice here, and again, I hope you're seeing the lessons here. And again, we're going through this to simply learn. We're not speaking poorly about either side, right? But the lesson here, if you notice, when persons are faced with a situation where they're at risk of losing all of their money, they focus on principle. Which brings me back to my earlier point, where what this person should have done before he put in the second million is to lower his risk by getting his principal back first before he added the other million, right? Because now you notice their concern or focus, they just want to get back their money, right? So it's like, well, party's over, this is not going to work out, I made a bad decision, I just want my money back, right? That's how, again, how persons will look at it, because the interest, how people sometimes treat investing, it feels like money that you didn't work for. So if you invest $1 million and the stock goes down and it's at 800,000, you kind of feel like, well, I made a bad decision, I'll wait until I break even and then sell it. I actually spoke to somebody about their portfolio this week, and that's what they said. They're not really sure why they bought what they bought, but all they want to do is wait long enough until they make their money back, right? So right now, this person is owed a total of 2.7 million, and all they're concerned about is the 2 million, right? And that kind of shows you, again, the mindset. I took a risk, it didn't work out, I just want back my principal, and I can move on, right? So the gleaner understand that it took days for Mocha to get the statement because complainants had to bring in several documents. Of course, you have to prove what you're saying is a situation. They're probably collecting from multiple parents, investigating the situation, etc. All right. Yesterday, Mocha, responding to Gleaner queries, confirmed that it has been made aware of the matter and received a report. However, the law enforcement body said it's not a Mocha policy to comment publicly on investigations or assessments that are before the agency. This is normal, right? But again, because of it is not a public matter, meaning the parents are the most important stakeholders in this, right? They need to know, for example, what's going to be the state of their finances. Now, I don't know what's going to be the ultimate decision. I saw another post, I think from Nationwide, saying that the school is going to continue to operate so that students can take their exam. Now, I don't know the state of minds of those students right now going into exams. I'm praying that they're able to get through it, because of course you'd have been preparing all year for exams, and certainly in the homes are tense. So just imagine a situation where, let's say, a husband and wife are there. The wife heard about the investment, the husband heard about it, the wife was not for it. The husband said, let's do it, and the husband puts money in. They got the first payment. The wife is now sold. No shells. Cash Plus offered 120% per year, not higher. Cash Plus was 10% per month, right? So what I was saying now, so imagine now the parents, let's say that you have two parents, one was in, one was not, and now this comes out. That home is tense, arguments, disagreements. I told you that you shouldn't do it, it was working out, and now whoever it is that made the decision to make this investment is now, feeling like they would have lost the hard-earned money of the family that now they have to find a way to replace, right? And in some cases, again, this is what we kind of say from the whole Cash Plus scenario as well. You hear about something like this, I would not be surprised if some parents borrowed money to put into it, right? Which means now they have a further liability that they have to repay somebody because they took the money to try and get an attractive return, right? So I think, like the SSL situation, we're not going to hear much publicly about this. I just pray that, again, there is some way, like Rennie and I literally prayed before I did this video. We prayed for the school, we prayed for the families, that this is resolved in a way that it's able to not have persons lose faith in the concept of investing, hope for the school's future. I don't know if they're gonna be able to move on from this. Maybe they'll need to rebrand. Maybe the parents, or rather the teachers, are also involved in this. Maybe they have to find other jobs. Like, this has such a massive impact, right? Students now may have to be displaced, and so their mental state is going to be affected. The public, when they hear about it, can sometimes be critical about it, referring to them as, persons who are not wise, and just the whole thing just can be embarrassing, right? So the Gleaner saw a copy of the letter from attorney at law Sophia O'Brien, who's representing Phoenix, Jamaica, which was sent to the investor parents. The letter is dated May 12th. So we write to you on behalf of our client in relation to the recent concerns raised by investors regarding the financial position of the school and the status of their investments. Our client fully acknowledges the concerns being expressed and does not take them lightly. An excerpt from the letter reads, I have some thoughts on this statement, by the way. As an educational institution entrusted with the care and development of young minds, Phoenix Academy recognizes that transparency, integrity, and accountability are especially important, not only to the families and staff who rely on the school, but also to the investors who have supported its mission, right? So here's the thing, and Renee is making the first point I was going to make here. It's not unusual for private school to raise funds, but the structure is unusual. Because here's the thing, I was just going to say, as I'm reading this, maybe it may not have been wise to get the parents involved, meaning there's nothing wrong with raising money in general, in principle, when you get the parents involved, right? So one of the things, and shout out to Mark, a member of our board. I remember I was discussing a partnership with a company, and one of the first things Mark said as he was facilitating the discussion between me and another CEO that was discussing partnership, Mark said something very important that stood out to me. At first, I was annoyed that he said it, but thinking about it after, and it turns out that he was right. What Mark said is, okay, I want you both to think about, what if this does not work out? And we're like, why would it not work out? It makes sense to us. Partnership looks good. We're good. But Mark kept insisting and said, you have to think about what happens if it does not work out. What kind of environment, what will be the consequences? How will you split if it is that you seek to work together on something, right? And that's the thing here, right? So the school, if they thought about, okay, what if we're not able to repay this as we expected? What kind of environment will that create with the parents, with the students, with the teachers? So that kind of risk, because again, it's not uncommon to raise money privately, right? But raising it from, it's like raising money from your customers, right? Because the parents, the students aren't the customers, the parents are the customers. The parents are the ones that pay for the children to be there. So it's like borrowing money from your customers and agreeing to pay them interest while providing a service to them. So it gets a little messy in that way. Not unusual to raise the money, but that kind of situation. So for example, it would be better you raise money outside of the school so you can manage that and maintain that separately, instead of now having to, because let's say there's just a bump or a hiccup that you need to resolve. The parent is going to be coming to school every day to drop off, what's the state of this, what's the state of this. So you don't really have the opportunity to have a separation, right? I notice here though, and maybe it's just lawyer speak, but it did not, the statement didn't acknowledge what was owed, right? It says, in relation to recent concerns, our client fully acknowledges the concerns, right? And again, I kind of know that's lawyer speak in a sense, but I noticed it did not acknowledge the monies being owed, right? But anyway, the attorney stated that currently her client is working with professional advisors to conduct a comprehensive review of the school's finances. When it gets here, and the fact that the place was locked up, meaning now the landlord is going to want their money, other debtors may Is it debtors or creditors? Other persons who are owed may come out of the woodwork to say, well, we are owed money too, we need those funds. And so it may take some time, because remember now, they're not likely to be able to generate any new income to be able to repay. That's also the issue that is presented here. Legal fees are here. We don't know if there are any fines or so that may come up based on what they're allowed to do, because I'm not sure what kind of framework is here, maybe preventing them from doing this kind of thing. So we don't know here, right? This includes reconciling accounts and confirming the individual positions of each investors. Until this process is complete, we're unable to provide specific financial statements or propose a concrete repayment schedule, Brian wrote. So the part that I just said, if they're not able to generate any new income, that repayment period is going to be long, right? So the first thing that's going to happen, likely what it will say is, for example, the financial position of the school is XYZ. You're going to have a major debt balance. You're going to identify principal collected, interest owed. You're likely going to have to write off the interest and work out a payment plan for the principal. And it's going to be now who is able to get their monies back first, right? What order it's going to be repaid in. It gets very messy from here, right? Nonetheless, our client remains committed to reaching a fair and responsible resolution with all stakeholders. Brian said once the review is concluded, she would communicate a summary of the school's that's what I thought. Confirm financial position, a proposed plan to address outstanding investment concerns, and a strategic outline for the school's operational and financial future. Our client's focus remains on acting in good faith. I like that we saw that, preserving the school's educational mission and restoring trust with those who have supported them, including you. We anticipate providing a substantial update within 60 days. We thank you for your continued patience and understanding as we work through this delicate but important process, the letter states. Now, for parents who has been owed money, oh, thanks, Ren. For parents who have been owed money for months, telling them to wait another 60 days is gonna feel like every day is gonna feel like it's a year here, right? Because and just general debt kind of management, right? So usually if somebody, where am I? Lesson number 4 or 5? There's been so many. So when I coach persons in business, right? Loan collection protocol typically says if something is owed more than 90 days, what was it? You have a 30% chance of getting back that money. 120 days, that percentage drops, and so on and so forth, right? What that is saying is the longer you're owed, the less likely you are to get back the full amount that is owed, right? That's why, for example, if you owe a bank, when it gets to a certain day's default, it goes to a collections agency. When it goes to the collections agency, it's just about maximizing the return. So when we see companies that are lending money, that's why when something gets past 90 days, for example, it gets to like bad debt status and things like that, right? So the number of days it takes, because again, think about it this way, right? If they didn't have the money to repay the interest, likely the principal is also not there. And so we'll see what happens, because here's the thing. If there is some IP, it depends on the assets of the school. If the school has assets being able to generate income, then maybe they're able to see their way through this. And I'm certainly, curious to see how this story finishes. Yes, thank you. Thank you, Renee. Greater than 90 days is considered a non-performing loan, right? But again, Parents don't want to hear that. Parents are going to want back their money, right? So Brian also addressed parents at a virtual meeting held on Monday, at which the topic of discussion was the lockout, which is reportedly connected to the funds owed to the landlord. I noticed they said virtual meeting. I'm like, if it was an in-person meeting, it probably would have gotten a little tense, right? In the meantime, another parent who's also moved his or her child from Phoenix, who asked not to be identified, claimed that $5 million is outstanding to him or her in the investment program, right? $5 million. The parents were the ones holding down Phoenix. We invested because a lot has been going on there, a parent told L.E.A.R.N, right? So this, what this said to me, and again, I don't know what was kind of the promise or the premise under which the investment was made, but they would have been sold a vision or something and they believed in that vision, right? Several efforts to reach the Minister of Education proved unsuccessful. And okay, so all right. Let me see if there are any questions here. So were they raising open for? So we don't know, right? That wasn't explicitly said. I'm imagining it's one out of a few things. Either they I don't want to make any assumptions here. So you either are going to be raising money for either expansion or to get working capital, right? Or to repay debt, right? As we've seen some companies do here. We don't know. As I said, I wish I could see, and maybe it will come out what the original premise or offer was, what parents were promised, etc. They're likely going to be told to keep things private until it is resolved, though. So I'm not sure how much we'll see. But yeah, Tabara said it was good seeing LGI live at the RPL AGM. Looks like you guys have things under control. Of course. And congratulations to RPL, by the way, on being identified by the Financial Times for being one of the best growth companies in the region. So kudos to them. So the school gates are closed if they can't pay rent for the property. Yes, the school gates are closed, has been closed since Monday. So that's a point that I was making, Shells, that if the school is closed and they can't generate income, repaying what is owed is going to be difficult, right? So if you owe money, you have to be able to generate income to be able to repay, because I'm assuming the assets that they may have, like, you know, furniture, other things like that, is not going to be equal to the amount that's owed. So even if you, let's say, liquidate assets to repay, there will still be a gap. Now, depending on if the teachers are, depends on the relationship between teachers and the school. Now, if the teachers are able to, for example, let's say they decided to change the model, offer like virtual classes, extra classes, you know, generate some income and repay that debt to the parents. But here's the thing, the parents may not even be interested in having their kids remain at the school. The parents may say, well, I'm not going to continue to pay you money. So again, it's like, I've loaned you money and then I have to keep paying you to provide a service to me. That's not likely to happen, right? So it gets a little tricky there, because if they can't continue to earn money, they're not going to be able to repay the money that they owe, right? So the landlord chained the gates and posted a notice on the gate for them to contact the lawyer. So Shells, I'll address this, right? So we weren't able to work out the streaming, but we did work out the session to be recorded and it will be uploaded. Now it's just I'm not sure why, but yeah, we're gonna hopefully get that to you soon. So Renee, our CEO, is saying that the recording will be uploaded tomorrow. But we surely, we definitely share that feedback as well, for sure. Okay, so let me try and close this out, right? So as I said, the first thing I'll say here is no judgment to any side, right? Not the school, not the parents, not the teachers, anybody. This is a difficult situation that I think highlights just the challenges in doing business, right? That's the first thing I'll say. Now, the school might have started with very, honest and clean intent, just simply raise some money, repay something attractive. The rate that they offered was too high, and so it put them in a position where they simply couldn't sustain it. Now, another thing that also comes up when persons are owed money, it's hard to say, well, let's pause it now. We can't pay any more interest. Let's stop it, and let's figure out a way to stop the bleeding and repay what we owe. Because here's the thing, when they saw that they weren't able to continue making interest payments, the prudent thing to have done is to say, parents, let's stop here. When we look at our cash balance, we simply can't sustain repaying you that interest right now. Let's pause the agreement. I know we said 20% per quarter, but we're going to revise it. We can't do 20, we can do 10, or we can do 5. Are you still interested? If you're not interested, we'll work out getting your principal in 60 days or 90 days. But we have to stop the original agreement cannot work. We have to refinance or something. That would have been better. Now, parents would have been upset, but the state to which is at now is worse, right? And that's just something I've learned in doing business, right? I remember, Renee, I don't know if you remember this either. We agreed to do some work for a client, right? We used to do accounting, consultancy training, etc. We met with a client. They wanted us to provide a service to help them, integrate QuickBooks, train their staff, etc. We started the project and we saw where we simply couldn't sustain it. We didn't collect money from the client or anything, but when we saw that we weren't going to be able to provide the service, we raised our hands and said, client, we can't do this for you, not in the way we promised. The client was upset, but we thought it was better to raise our hands early and say, we can't do this. I know we promised you that we'd help you, but we can't help you. And even though money didn't exchange hands, what we learned from all of the mistakes we made, that it's better to just be honest, right? So when the school saw that they weren't going to be able to pay, because trust me, by the end of the first quarter, it would have been clear that the model is not sustainable. Because whatever amount they borrowed, paying 20% in a quarter is ridiculous, right? It wouldn't be practical for a school that needed to raise money in that way to begin with, right? So I wish they would have done that. That would have maybe made things a little bit palatable, but it felt probably easier to just keep taking the money because we'll figure it out. Things will get better. The economy will improve. We'll add some new courses or something. That's kind of the mindset, right? But it's just better, right? It says big impact, Shells. That's what the shirt says. We got it at a conference that we went to a couple of years ago, right? But the chair doesn't come up any higher, so that's why you can't see the rest of the shirt. But that would have been important, because the thing is, now when trust is broken, it's going to be very hard, right? So now the credibility of the school is impacted. All the good work that they would have done would have been impacted. I don't know, Rennie, I don't know if you know anybody who has gone to this school, but like it's that's how these things work, right? You do one thing, or there's one incident, and there's just a whole lot of theories and conspiracy theories or other theories about what they should have or could have done, and it just again becomes so messy for everybody involved. I'm very, very concerned about the children in this case, their state of mind. I'm concerned about the families that are going to be impacted, in terms of now, if maybe husband and wife or mother and father weren't on the same page, there's tension there. It could have been savings. It could have been money that was borrowed to be invested. I know that has to be repaid, and just the whole, kind of things that will unfold from here. So I really just, and the timing of it being exams, and that's why I'm saying I wish there was some way for them to either push that back. I really hope the children, are able to get through it, because now if they don't pass their exams, they have to go through this process all over again. Right? So I think what I may do here, Renee, is probably just I'll do something more coordinated in terms of the lessons learned, because I feel like we should have something documented from this, just some lessons that I think will help persons in terms of evaluating investments, and from the company side, because we do have a business community, entrepreneurs who are tempted to raise money in this way. It has pros and cons, right? And I think we can just help persons understand this situation. Trust me, it's more common than you realize. Not everything makes it to the news. And so yeah. So the ministry has not said anything yet. They likely won't say anything for a while. That's how these things go. Yeah, absolutely. I think it can be a case study. I hope we get the ability to see what was the original offer. I wish it was a public company, because if it was public, we'd be able to see the financials. I'm not sure we'll see that, but that would tell us, again, what the company is able to afford. But it is a mess for sure, right? So we do pray, Renee and I do pray that, everybody involved, that it's resolved in a meaningful way, and that the kids who are the most vulnerable in all of this will be able to get through their exams. I think we can pause it here. Let me know if anybody has any questions or comments. And if not, I can wrap up. Satavaris, I didn't get to meet you. I'm happy that Rennie was able to meet you. I wish I was there, right? Because certainly would have loved to meet you in person. Shelza also would love to meet you. I'm not sure if you're in Jamaica, but it would be great to meet you guys at our next LGI meetup. I don't know when that is, Renee, but we're having one soon. And it would be good to see some of you guys. I'm not sure that I saw anything that I missed. Yeah, so I think I'd close the loop on our story, because as I said, Renee and I put us in a similar situation in the past, and we were able to repay those monies. So I don't owe anybody in that sense. It's not that I don't have debt now, but from our first business, I believe we paid everybody who we owed. I even had a situation where I borrowed from a family member that permanently destroyed the relationship. I was able to repay them years later, and apologized, of course, because I think in that case the family member lent 120,000, and I think I agreed to pay. I don't remember what I agreed to pay. I made one payment as well, and it could not be sustained, and so that broke down as well. They needed the money. I didn't have it to give them back, and then it took me years to get back to the point to be able to repay them. So I really do. I'm not at a place where I can judge this school and what they tried to do. As I said, I think the intent, certainly when I borrowed the money from my family member at the time, I thought that everything would work out, or I simply didn't think about it working out. I just literally thought I needed some money, and this was the way to do it. And usually, so here's the thing, guys, when you make an investment, you have something to gain. The person who you make the investment in terms of a company, has something to gain as well. So ideally, investments in this way should be mutual. You give me capital, you get a reasonable return based on what your expectations are. So I want persons to understand that there should be equal accountability on both sides, meaning it's on the parents who would have done who should have done due diligence, get financial advice, speak to someone, say, hey, I'm about to make this investment. Does this seem like something wise to you? Right? Is the company in good standing? Right? That's the importance of due diligence. On the school side, they should have had somebody advising them on how to raise money, how to get maybe patient capital to give themselves breathing room to actually grow the business, right? When you borrow money in that way, it's too it sucks out all of your cash flow. So there's no way to grow because you're having to pay out cash. And as I said, we as Learn Grow Invest have needed capital in the past, and we decided that the best way right now is simply just to use our own money, because if we use the debt, we'd be still repaying the debt, right? And what we've had to do is simply just pivot until we found a model that works, and we're able to kind of recover, repay the debts that we owe. And the debts here are usually just like, let's say we do something and we have let's say we work with somebody on a project. We just simply, we're upfront, this is what we can afford to do, we'll pay you back in X date, and we try to manage things that way. So I can't come up here and say that we don't owe anybody, we don't this, we don't that. I think people who speak like that either have never been in business or simply don't well, might have been fortunate to not have been in that position, right? So okay. So Law Boss Firm says, I'm not sure if public perception is among the lessons learned. Key stakeholders started to badmouth the entire entity, which affected the number. Thank you for this lesson here, right? So that is true as well. I did kind of touch on this briefly when I say their ability to earn is going to, of course, impact how soon the parents are going to be repaid. This is true, right? But here's the thing though, Law Boss. That's why I said what the school should have done is at the point where they saw that they weren't able to make the payments is manage the stakeholders, right? Because here's the thing. If I lend you money and you're not paying me, it is typical for persons to just start talking, to go on social media, to do videos, to spread the word, because that's how we are as a culture, right? We talk about the things that upset us, that frustrate us. So I thought, and I was discussing this with Renee, that the school should have managed their stakeholders, right? They should have said and been clear, this is a situation we're in, things aren't working out the way we planned, let's pause it, let's stop things here, this is what we can do, this is how we can work it out, because it went so long, Law Boss, the perception is going to be unavoidably bad, because persons are now owed, look at the parent who is owed 700,000, right? They put in 2 million, they're owed 700,000. So 700,000 means it's multiple quarters of payments of interest payments that would have been missed. So at this point, you're nothing but upset. It's going to be hard to be patient when you don't know if you're going to get back your money, right? So Levine says, I have a question. What would the school be doing to generate 20% a quarter on those large principals? So here's the thing. It depends on the business model. Now, I don't know, for example, how much they make, how much they charge, what their operating expenses are, what their salaries are. So what I was saying to this, if you are committing to repaying 20%, your margins, and I say net profit margins here, would have needed to be at least 80% or higher per quarter, because remember, you can only repay interest from profit, because if you don't repay interest from profit, you're going to go further in debt, right? Bad debt is a part of business, is what you do after that matters. When you're saying this on the part of the company, because here's the thing, the bad debt here is on the part of the parents, right? They're the ones who debt is owed to. They're the ones that gave the loan, right? It seemed the funds was raised February 2024, right? They expected the JC to be doing better. Well, so it doesn't. So the term IPO was used again. It didn't seem to have anything to do with Oh well, no, I get what you're saying. I get what you're saying. I don't think they invested in anything. I think they just put it in the operations of the school, right? Good. Renee said good thing as a netballer because the level of pivoting has been crazy. So I mean, I'm fortunate for all the mistakes we've made as a company. I'm fortunate that there are certain things that we don't do anymore, right? Because if we would have gone to take on debt for LGI, maybe we still wouldn't have LGI right now. Meaning, if things got so bad, so just imagine if the persons that we owed, decided to do the same thing. Go to social media, go to this. It would have been bad for our brand and all of that stuff, right? So I'm just saying that, and I mean that's why we have like a board, etc. We spoke about debt many times. The board is like, nope, no debt. so yeah, if it's human nature, I'm assuming people will write negative reviews more than positive. No, so here's the thing. When the interest was being paid, I'm sure word was being spread. It was just probably to pull more people in, right? So remember the note from the parents said it seemed to have been going well. So I'm sure persons heard about it. It's just that now the negative news is gonna have a more viral effect, right? If margins are that high, why do a debt raise that high? No. So here's the thing. They likely weren't, because as I said, so here's the thing. If the margins were high, because it depends on the business model, Omar, right? So for example, let's say, and as I said, it depends on the premise under which they were raising money. If they were raising money, for example, because it's a school, let's say they wanted to invest in a platform or learning management system or something, they would have needed to raise capital. It's something that you're gonna have to build out, add your courses, etc. You need 6 months to do it, and then you start earning from that. We don't know, right? We don't know what was proposed here, but that could have been something legitimate that they would have needed to raise money for. So I don't know what they told the parents for why they needed the 6 million, but it could have just been very attractive to hear 20% per quarter, right? Because remember, the average person is not necessarily educated as to what is a reasonable rate of return. So they hear 20%, and so I'm sure they would have been nervous when they made the first payment, right? But when they saw the first interest payment, they were probably like, okay, cool. I took a risk, 3 months, I got the money, all is well. And that's why it would have led some of those parents to maybe give more money, right? So that would have been just, so it again, it is something that we see, over and over again in terms of how persons view investing, right? So, all right. I think we can close it here, guys. Thanks for being here. I am going to be discussing this in the community as well, as we learn some more information about this, because I think there are some like definite clear lessons, or using this as a case study I think would be good. Because when the last, I don't know if, what was it called again? There was a scheme that came out last year, World something. I don't remember the name. And when it came out, I thought, should we do a video on Ponzi schemes, etc., what to look for in an investment? And I decided not to do it, right? Because I don't typically want to do the videos that appear to be like, clickbait or anything like that. But it's important for us to teach people to understand how to evaluate investments, how to look at something and say, well, this raises a red flag, this doesn't make sense, this is realistic, this is not. Because here's the thing, it's easy to look at it and say, well, the parents didn't make a wise decision, but you would have been doing business with the school, you trust the teachers, you have your children there. It's easy to just say, okay, let's give them a chance, especially if they made a very compelling case here, right? So before I go, I just want everybody watching to just be fair in your assessment of the situation, not be quick to judge or criticize anybody, right? Not the school, not the parents, not the teachers, etc. And if you can, just kind of encourage persons to learn about investing in the right way, to learn about how to evaluate investments, how to make decisions. If you take a risk, how to limit that risk, things like that. I think this is an opportunity for persons to learn how to do it right, because there are private investments that work out, right? Every public company likely started as a private one, right? Because no company starts and goes straight to the market, right? So early investors take a lot of risk, and just kind of extend grace is what I'm saying, right? So Renee says it, be quick to listen, slow to speak, extend grace to those who are in the situation, right? 100%. And I say Omar says do a video on Ponzi scheme. I think we have enough for me to do one for sure. So I'll start to prepare that, right? Because I think it's important to just learn how to do this in a smart way, right? Because as I said, it could have started out well and simply just wasn't managed well, and so it became something when it didn't have to be, right? And I wish I could speak to the owners of the school, or just to kind of just to diagnose the situation, just to understand what they were thinking, what would have led to this, but I may not have the opportunity. So thanks again for watching, guys. Share the video for someone who may want to understand the situation better, or just to hear our thoughts on it. And if you have any comments, if you're watching this on a replay, go ahead and share. And yeah, I'll see you in the next one.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.